Africa Pavilion, where we are hosting a whole range of conversations. And I think that this is one of the most important conversations that's focusing on how we can power our economy going forward, but to do it in a way that is responsive to the climate challenge that we're facing globally, but also starts to harness the opportunities that we have to build greater energy security in the country. So RAiSE is a program that is implemented by the National Business Initiative, but we partner with some really key organizations in the space. So namely, we partner with RE100, led by the Climate Group and in collaboration with the CDP. And we also work closely with the World Business Council for Sustainable Development in implementing this program. I think we're keenly aware that the private sector has a large role to play in decarbonizing the South African economy and landscape, and that renewable energy is at the forefront of this. NBI did some work in the recent past with Business Unity South Africa, as well as with the Boston Consulting Group, really trying to understand the pathways that are available to the South African economy to decarbonize in a way that is sustainable, but one that also recognizes the enormity of the climate challenge that we are trying to address. And so as part of the work that we're doing with RAiSE, it's really focusing on how do we build the ambition of the corporate sector in particular to contribute to a broader national conversation, to a broader global effort on reducing our reliance on some of the more carbon-intensive fuels, particularly in the electricity sector, and also looking at how we address the barriers to unlocking renewables that we want to see at the scale that is necessary. So in this event, we're really looking at a number of different issues, and we are joined by, I think, just to recognize, first of all, that we do have the Minister of Mineral Resources and Energy in the room, so to recognize his presence, but also to acknowledge the speakers and the panelists that we have who will be reflecting on the opportunities, but also acknowledging the very real challenges that we face as a country to expanding our renewable energy base. So in starting off the session, I would like to call on Neil Cole, who's from the presidency, just to give us some insight and context on the role that the private sector is playing in expanding, I think, South Africa's broader energy base, but focusing explicitly on the renewable energy space. We know that there's a lot that's happening in the policy space that Neil can give us some reflection and insight into, but really acknowledging that as a key partner, the private sector, business is there to contribute to South Africa's climate change goals and really how we can drive that, as well as to some of the broader issues that we're facing in the energy space. Thank you very much, Neil.
Thank you very much, moderator. Let me start by saying that I am replacing my colleague, Jared Moodley, who was directed to serve on this panel at this event. Unfortunately, he had to return home for a medical emergency, but I'm going to do my best. So I'm Neil Cole. I'm with the JET Project Management Unit that is now officially located within the presidency, and our responsibility is to drive the implementation of the JET investment plan. I need to say that I spent about 15 years in the National Treasury in the Budget Office, 9 years away from government, and returned last year to be part of the team that drafted the investment plan. And it's certainly been good to get back into government and back into the various complexities that we have to deal with as a public sector. I think a good place to start is to say that the JET investment plan is a government program. It is a government program that the President tabled at COP28 in Sharm el-Sheikh, and then we were directed to develop an implementation plan. And that implementation was approved by Cabinet on the 15th of December, so we have a mandate to implement our investment plan. And for those that have had an opportunity to to read through the 300 pages of the implementation plan, you'd see that there's a great deal of attention that we paid to setting out a roadmap in each of the portfolios that we've identified as priority areas. So electricity, new energy vehicles, green hydrogen, municipalities. We've also brought in the South African Renewable Energy Master Plan as a industrial policy for South Africa in renewable energy that should be guiding and underpinning a lot of the work that we've done. Other areas also skills, so identifying the important skills that are required. But turning back to this concept of a government plan. A government plan is a plan that the National Treasury and the Cabinet needs to give careful attention in terms of how will that plan be financed, right? And not every government plan needs to be financed off budget. And a lot of the interesting work that's been done around fiscal policy analysis and also some more recent work being done on green fiscal policy is to say that there's a source of financing of a plan that comes from the budget. Governments can also undertake extensive reprioritization within the budget in order to direct financing away from lower priorities to higher priorities. We can also engage with our international partners, like we've done for the presidential declaration that was signed at COP26, and the outcome of that being the International Partnership Group, and leading to the development of the investment plan, where the international group of international partners pledged an amount of 8.5 billion US dollars, made up of different sources and different instruments. But then there's also a very important source of financing that we need to be tapping into, and that is the private sector. And PPPs that we've already done is essentially looking towards the private sector to invest. The Renewable Energy Independent Power Producer Program that our minister, who is with us today, leads, is essentially getting the private sector to invest in renewable energy generation. And throughout the implementation plan, those opportunities for sources of financing that's going to make up the financing required for the implementation have been identified. We recognize within the plan that a lot of the new generation will be private investment. We also include in the implementation plan the opportunities for private investment into the transmission grid, and also included in the implementation plan is how do we go forward on the accelerated coal transition with the opportunity for a PPP there as well. But let me just make some, I suppose, more general comments on the partnership and the opportunities, and maybe these are going to come across more like principles in that partnership and in undertaking the opportunities. I think the first is the efficiency that collaboration brings about, right? And I think it is about thinking what is the shared benefit that we are working towards in terms of our common goal in South Africa, and is there a common goal of the public and the private sector in the way that we are going to be proceeding. But efficiency is also about looking for the expertise. So is the private sector better at doing something, and what are the opportunities to get the private sector to do precisely that? But at the same time, what is the public sector a lot better at than the private sector? But it is about thinking the opportunity for collaboration, how does it enable us to bring about greater efficiency? The second is cost reduction. So we've been looking at unlocking the concessional loans within the IPG offer, and the cost of capital, and also this big amount that we've identified that we require, And the sovereign guarantees that the National Treasury would need to be providing if Eskom or Transnet is going to be the borrower has been a stumbling block. And we've been working for some time now and looking at ways in which we are going to be able to unlock those concessional loans. We've been looking at various models, and some of those models are models that are going to take a lot of those concessional loans off of the balance sheet, but still supporting a entity like Eskom or Transnet. But that's going to require a collaboration, not only between the public and the private sector, but thinking of the public sector more broadly in terms of the multilateral development banks and also DFIs. The next is risk mitigation that a collaboration can bring about. And I think the principle is fairly straightforward, and that is by distributing the risk among multiple partners, the impact of some of these unforeseen challenges, failures can be minimized. And then the last and not least is community building and social capital. And maybe here to speak about the funding platform that we're going to be setting up as the PMU. And it's really it started off with the title of a clearinghouse, and we weren't too happy with the term. So it's more like a matchmaking platform that will be matching sort of grant makers with project originators. And on the grant making side, we want to look at various sources that would include social or corporate social investments, grants from philanthropies, grants from multilateral development banks and DFIs, and also the grants that we've already identified as part of our IPG partners. So I suppose just in summary, it's a government plan. We need to take a fiscal space analysis to it. That fiscal space analysis should be providing for various sources to participate in financing that plan. I think there are several important principles that we need to apply. Some of them important in terms of ensuring the just transition, but some of it is going to be absolutely necessary if we're going to be able to mobilize the kind of financing that we're going to be requiring. Thank you.
So thank you very much, Neil, for just giving us an insight into perhaps some of those key frameworks that are shaping how South Africa is thinking about its transition, and I think progressively translating those into more and more concrete actions. I think the role of partnerships is an important one. It presupposes and it acknowledges that there are a range of players who need to come to the table, each with a role, each with something to contribute. And as we delve and kind of move from this macro picture and start to look at specifically where is the corporate sector featuring in rolling out South Africa's renewable energy plan, that corporate sectors play multiple roles. So from the finance and in the investment part, I think Neil gave us some good insight into what's happening there. But also to just acknowledge that it's not just in the investment space, it's how corporates themselves are either owning or procuring the renewable energy, participating in the market and really shaping what South Africa's emerging renewable landscape actually looks like. I think it's a very exciting time. We are in the process really of recognizing that the country is changing. Our energy landscape is changing. The role players, those who are featuring and driving what this energy landscape looks like is changing. So we know we are in the midst of some very important kind of policy conversations. For example, the Integrated Resource Plan is one of those key documents, as well as some of the work that's taking place in the PMU to shape and put together this landscape in a more holistic way. We are represented by finance. We do have finance representatives in the room today, so we'll get a little bit more of that insight. But as I said, this landscape is a bit complex. So there are, there are demand components, there are supply components, and really the corporate sector is well placed and should be playing a very active role in making sure that we are leveraging, I think, the respective expertise that are sitting here that enable us to be competitive, but that also enable us to access the huge renewable energy resources that the country has. It's also important to acknowledge that there are challenges, there are barriers for us realizing our full potential, I think, as a country. And I would like to call upon Maddie Pickup from the Climate Group. She's a Senior Policy Advisor at the Climate Group, to just give us an insight on what are some of those additional challenges that we need to be focusing on to fully unleash the potential that corporates have to contribute to a broader, I think, national transition. And as I mentioned, earlier on, some of you may have seen the infographic that's on the wall in the other parts of the pavilion, but that's really speaking to the size of the renewable energy complement that we need to see on our grid to decarbonize, but also to anchor the development of new industries and new opportunities. So Maddie, I invite you to the podium just to give us a sense of what are some of those barriers we need to be looking at.
Thank you, Rita Metzi, and hello everyone. As Rita Metzi says, I'm Maddie. I'm the Senior Policy Manager at RE100. So those of you that don't know RE100, we're a global corporate commitment campaign bringing together some of the world's largest and most influential corporates committing to 100% renewables. So we were really excited to be partnering with NBI and with WBCSD on RAiSE, the Renewables Ambition in South African Electricity platform, because as Rita Metzi was saying, there's a lot of momentum in this space in South Africa right now. It's a really exciting time, but we all need to come together, and RE100 brings that demand signal from over 400 multinational companies with the electricity consumption larger than that of the whole of France. So it's quite a considerable demand signal. And the question really is, what do those companies want? And our job is to communicate that kind of at a collective level to the government. So what I want to speak to today is just kind of a quick run through of some of the key barriers that our corporates are facing, both in South Africa, but in other countries across the world too. So maybe just a quick plug. We just released this report, which you'll be able to find on the counter on your way out. So please do collect one. It's looking at the common barriers to corporate procurement of renewables across a number of G20 countries. We use 8 countries as examples, and South Africa is one of them. And we speak to some of the barriers, sort of key barriers, and how they're manifesting in those geographies. So encourage you to have a read, but maybe quickly to give an insight into some of those areas as common barriers, and then particularly what we're talking about when it comes to South Africa, both in this report and then generally in our work with RAiSE and what we're looking to do in the coming years. So we divided the report into 3 themes, which we found kind of most of the barriers that our companies are experiencing all fall into. These themes were availability, so the actual supply of renewables, how much is available in the country, and then accessibility, so how are corporates able to access those renewables, what procurement options are on the table, is it simple enough, is it is it complicated guidelines, procedures? How do they get those renewables once they are available? And then the third area is around affordability. So are they cost competitive against renewables, against fossil fuels? Are they able to play on a level playing field, and so therefore make business sense for our corporates to purchase? So quickly, in terms of broadly what we found and what those recommendations are that we sort of see as being a starting point for any government in trying to address corporates' needs, are under the availability point. We suggest that governments incentivize and increase supply to ensure sufficient availability of renewables. And some of the things that we're recommending to do amongst that is working with utilities and suppliers to provide and improve options for corporate renewable electricity sourcing, to address permitting and siting issues that are unduly limiting opportunities for installation of new renewables, and to promote direct investment in on-site and off-site renewables. I'll speak in a moment to some of the examples from South Africa. On the second area, so the accessibility of those renewables, we recommend governments establishing an enabling regulatory environment for corporate sourcing and accessibility of renewables. As part of this, we suggest increasing the transparency and additionality of renewable electricity certificates, easing complicated PPA processes, including addressing the lack of transparency and incentives on PPAs, and understanding and amending the geographic and regional disparities in the availability of those PPAs, and harmonizing the rules and processes across kind of subnational or regional governments. So those are our broad recommendations. Oh, sorry, I've missed one on affordability. It's really about creating a level playing field to ensure the affordability of renewables. So where the cost has been proven to be low in some geographies, that's really not carrying through to the price that corporates are having to pay. And so what needs to be unlocked and what needs to change in order for them to be affordable? And some of our recommendations there are just, allowing the fair competition against fossil fuels, and reducing and getting rid of subsidies, so that there's that fair competition. So on to South Africa. How we're finding those issues are playing out in the South African context, and this is both from the findings of the report, but a lot of kind of work and consultations that we've done as RAiSE with NBI, with our members and other stakeholders in the space to really find out what is it that needs to be addressed to enable the transition in South Africa. So a particular challenge that comes out in this report and that we dug into is around issues with grid and transmission. I think most of the people in this room are probably very familiar with some of those challenges. But what that means for South Africa at the moment is that only around 30 gigawatts of renewables can be added to the grid, which is way off the target of 190 gigawatts needed by 2050 for net zero. I'll talk a bit louder for a bit, shall I? I've got quite a loud voice. Most renewables installations are found in the Northern Cape at the moment in South Africa, where there's vast kind of wind and solar potential. But the grid there is kind of overburdened and running out of capacity. So it's difficult to connect those projects to the grid. So really some kind of grid capacity and connection things that need to be unlocked there. Obviously, some really positive developments as well. We heard about the RAiPPP earlier and how much that's stimulating renewables development and investment with, I think it's 256 billion rand, which is about 17 billion US dollars, committed through the RAiPPP. And now it's really about how is that implemented, how are those funds being used, and taking it forward and making sure that the grid is there to enable those projects to make it from kind of production to consumer. Just I guess another example that's also in the report is about the kind of backlog there, where there's 64 gigawatts of wind and solar projects that are being considered for development, with 57 gigawatts proposed in an area that only has 5 gigawatts of residual grid capacity. So that really gives a sense of the gap that there is in the grid capacity to bring these renewables online. So when we're looking at developing these projects, we also need to make sure they can get to the end user. And that's something that's come up a lot in the work that we've done as RAiSE, and we've actually done a number of activities around this already, around wheeling and really taking that power across to where it needs to be. And I think that's really very often recognized as one of the key things to unlock that transition for South Africa. We've done some kind of workshops and things around that. And recently we had, as RAiSE, we had a thought leadership session where Vodacom presented a new platform they've created for virtual wheeling, which I think they did in partnership with Eskom. So yeah, some really sort of positive movements, but some key things to look at there. High price, limited supply, transmission, wheeling, and grid capacity. So yeah, that's what we're hearing from our members. That's what we found to be some of the key barriers. I'm sure we'll get into that a little bit more in the panel, but hopefully that's interesting, that's helpful. Please pick up a report, have a read, and obviously welcome anyone reaching out to us as RA100 if they'd like to share more about their barriers, and looking forward to working with NBI and WBCSD to address some of these issues going forward. So thank you very much.
So thank you very much, Maddie, for giving us some insight into the issues that we're still struggling with as a country, just in terms of accessing a resource that is an incredible one, I think, by global standards, that's well recognized. And part of the conversation we're having here is mobilizing one part of that ecosystem to make sure that they take their full share of the agency and opportunity that's sitting in the space, but as part of a broader national contribution. So that's the one thing I'd like to emphasize. So in the next segment of the session, we will be having a panel discussion with representatives from the finance sector, just giving us some insight on what they're seeing, how the market is maturing, how it's opening up, some reflections as well from municipalities who are a key part of South Africa's energy system, as well as reflecting more broadly on how collectively we're addressing some of the challenges that Maddie has spoken to. Not all of them, but some of the big challenges. And I think what will come out of the session as well is a recognition of the significant amount of progress that we're making. It's a very exciting space. And I think as a country, we are well placed to access a huge opportunity that speaks to energy security, it speaks to our climate goals, but it also speaks to them in a way that can really stimulate our economy and place us on a wonderful footing going forward. So I'm going to call Bhavna Diyanarayan, who's from the NBI. She's the project manager, the senior project manager at the NBI, and has been leading much of the work on RAiSE.
Thanks, Ruchimetsi, and good afternoon, everyone. Thank you for joining the session. Today, we have an esteemed panel. We have Justin Smith from APSA, who is the head of new sector development at APSA Group Limited. We have Mr. Mtebeli Kolisa, the Chief Officer of Infrastructure Delivery, Spatial Transformation Services, Sustainability and Inclusive Communities at SALGA, the South African Local Governments Association. And we have Mr. Nicholas Kleget, Director of Net Zero Carbon Strategy at Heineken. Before we welcome the panelists to the front, we have a short input, a presentation from SALGA, so we'd like to welcome you, Mr. Mtebeli.
Thank you very much, Mandy, and Ritumetse, the program facilitator. We thought we may want to latch on the presentation that has just been made in terms of how municipalities fit in trying to unlock renewable energy in South Africa. How are we contributing as municipalities to try and resolve some of the difficulties that we have as a country? So we prepared a presentation that will take us through that. It's a very short presentation. I would like to acknowledge the presence of the Minister, Bomkwati Siyabulis, and also the panelists that are here. In respect of the issues that we're going to discuss, we're going to focus on three areas for this discussion. One, the wheeling part and the role of municipalities. The other part is the municipalities and renewables, not just as a means from one to the other, that is in terms of wheeling. And then the last part that I'm going to talk about is what possibly can we do together in partnership with the private sector. I suppose the person who's running the slides will try and follow me, because I'm not. Oh, that's it. All right. Yeah. Oh, okay. Yes. I thought the first part that we need to just comment about is the issue of the wheeling. That what we have as a challenge is the regulatory framework that we have to deal with in relation to wheeling. That we don't have a standardized framework that allows municipalities to act in a common way in terms of processing applications for wheeling, in terms of pricing in the system, the applications for wheeling, and we have raised this issue, and it is being handled. That the National Energy Crisis Committee, Workstream 9, is dealing with it, and we're happy that this is being dealt with, that a product of that process has now in the hands of NERSA, which is the regulator of electricity, to process it further, and we think it then starts to resolve that particular difficulty. But what is in it for municipalities? Why are we keen to get this resolved? It's not just because it will just help somebody. It is important for us as municipalities, in the sense that it could be a source of revenue for municipality. That is this wheeling service through our networks. 1, 2, that it helps us to retain commercial and industrial consumers that are currently being impacted negatively by load shedding. That if they were to be able to access energy to reduce the impact on load shedding, they would stay in our municipal areas. There are municipalities that currently, as a result of load shedding, are likely to lose some of the commercial and industrial consumers, and are saying, allow a system through which we can be able to import some of the energy outside of the grid into our operations. Also, it's a business model. We have this network as municipalities. It's a potential model for the role of municipalities going forward. Now, while waiting for this framework to be made into regulatory systems, we have had to start to do some work. We've partnered with organizations such as Ernst & Young. We've partnered with the Operation Vulindlela in the presidency. We've partnered with the institutions such as GIZ to develop a guide that municipalities can use in terms of processing the wheeling applications and managing this wheeling. There are a number of municipalities that have already shown interest in establishing these wheeling processes. For example, City of Cape Town, George Municipality are already piloting, just like Eskom has been doing in their jurisdictions, wheeling. We have other municipalities such as Msunduzi that are already also at the verge of starting to implement in their municipal areas. We are, as an organization, SALGA, also involved in training municipalities. Already covered more than 120 municipalities in training them in terms of how to deal with the issues of applications and managing wheeling in their areas, in line with the anticipated framework that they have referred to earlier on. This training covers a whole lot of things. We get municipalities to understand the bottlenecks, we get municipalities to understand even the guideline itself and the templates that are required in order for them to process, and then the wheeling agreements, templates, and what private sector requires in order to move on in respect of wheeling. Now, outside of the wheeling, there's then the second part that I was asked to talk about, the issue of renewable energy projects in municipalities. That other than that, municipalities themselves have started, because the regulatory environment now allows, have started to look at participating in renewable energy. They started, many of them, in buildings and in also resolving issues of supply of energy to provide services such as water supply, such as wastewater purification and pumping and so on and so on. We're looking at opportunities of doing that. We are developing partnerships with organizations such as UK Pact to start providing legal and technical support to municipalities that are really wanting to initiate projects that are for their own operations as municipalities. We have worked with institutions such as South African German Energy Program, SENGEN, in sharing knowledge with municipalities on renewable energy and what municipalities can do. This slide just talks to, I've been talking to my own slides. I just wanted to, I don't know how to make this work. I was saying that this slide talks to Mandy, tell me when I'm missing the slides. These are some of the support that is provided to various municipalities by SALC. I'm not going to go into detail there to save time. Then what we are seeing is that a number of municipalities, as I said, are beginning to really explore. City of Ekurhuleni, for example, is procuring over 600 megawatts from solar PV, waste to energy, and has already entered into power purchase agreements with more than 47 IPPs. City of Cape Town is also doing the same in terms of procuring. We have been working with other municipalities just to help them to develop their energy plans. That will then lead to them getting to a stage of procurement. A lot of secondary cities are learning from this work that I'm sharing here today, and are gearing themselves to also get into the space. Now, to conclude this, what are the opportunities for local government and business to work together, at least in the area of renewable energy? The first one is, of course, as we identify these opportunities, such as we need to invest in renewable energy in order to power our own operations in water supply, for example, in sanitation services, we don't always have the resources to do that. So we need to partner with private sector in the form of private-public partnerships. I know that a few of our municipalities have done feasibility studies. I know City of Tshwane completed a feasibility study on a waste-to-energy, massive waste-to-energy project, but now is looking at taking the process through to establish a private-public partnership. We could get into concessions. We could get into agreements in terms of power purchase agreements. So those are some of the things. And then other, say, commercial businesses could sell back power that they have producing in excess from their solar PVs. And then, of course, what I talked about earlier on, the wheeling agreements with municipalities so that they can access power from other producers. Now, the last one, what we think is an opportunity for partnership, is a consideration seriously of partnering with SALGA to enable all of these. As we said, we see the constraints in terms of wheeling, and we want to create a scale, a scale where municipalities can be ready to process and facilitate the purchase of power from producers to the consumers through the municipal system. So that's one thing that if you were to spend your corporate social investment in partnering with an organization, that helps, that it then creates a possibility for the private sector. The other one is, of course, just empowering the municipalities themselves to engage meaningfully in terms of renewable energy. We think that is a possibility. So those are some of the areas that we think we could work together to try and resolve and help local government, because it does give scale when it starts to participate for all of these interventions to be workable. Thank you very much.
Thank you, and I'd like to call our panelists to take their seats. Thanks. I don't think the mic is on. Okay, it's on. Thanks, everyone. So we've heard from the municipalities, we've heard from Presidency in the PMU, and we've also heard from our international partner, RE100. I think we'd like to move over. We'll start with Justin from a financier perspective, just to get some insights on the projects that you're seeing coming online after the removal of the threshold, the licensing threshold, and how APSA is playing a role in supporting unlocking renewable energy projects in the country.
Thanks, Bhavna. I think just to start, everyone knows what's happening in REAP, all the utility scale projects. So I'm not going to dive into that, even though we have about a 2 gigawatt pipeline of those utility scale corporate PPAs that are waiting in the investment bank to be unlocked. I think for me, I'll just paint a picture listening to what everyone said and our experience, 8 years ago versus where we are today. So about 8 years ago, we started a focus on renewable energy as a bank, looking at businesses. We saw a lot of farmers, a lot of manufacturers, a lot of IPPs at the smaller scale, starting to look at this industry. And really, we thought, this is going to be big, but we didn't understand where we would be today. Back then, regulation wasn't as clear as it is today. A lot of the municipalities, we weren't sure on the processes. I think there were the caps, the 1 megawatt cap. Fast forward today, and also I think I was talking to you about it, looking at our strategy 5 years ago and the targets we had. When we look at the number we had set ourselves for 1 year back then, taken to Exco, last month we paid more than that by about 40% in 1 month. And I think that just shows the volume and the value of increase in the sector. So fast forward to today, it's been interesting. Because of load shedding, we've seen 80% of all deals have battery integration. And I think that's really important because of the load shedding crisis, a lot of corporates, a lot of farmers, a lot of smaller businesses are saying, well, I can put solar on my roof. If I'm sitting in a municipality that I'm paying R2.50 for my energy, I put the solar up, but I also put the batteries up. If I compare that to the cost of running generators, it's at least R7.50. So now I put that package together and I say, well, actually, I can produce power a lot cheaper as a business. And where you were mentioning, you want to keep those businesses in the municipality, I think that keeps businesses going, keeps them surviving. So we've seen that this year. I think our payouts have increased 60% year on year. And all of this is because we've got a clearer regulatory environment. I think there's really good support. There was a note on incentives. I think the 125% tax incentive, businesses are allowed to invest in solar. They can write that off at 125% of the cost. So if I've invested 10 million rand, I can claim 12.5 million off my tax, my bill with SARS. So I think that's really great. And I mentioned it yesterday, but we went live yesterday on the Bounce Back Energy Scheme with SARB and National Treasury. And what that is 4 of the banks are participating, but it just shows where we are getting support from public sector, from SARB through Treasury, where clients can access cheaper funding. The bank gets guaranteed, or all the banks get guarantees. And I think it just shows that commitment to support, and not just the big, because this is not utility scale projects, this is for businesses, smaller businesses, for installers. So I think the point I'm trying to make is that the environment compared to where we were, I think is really conducive. And it's quite exciting to see where corporates are going to go over the next few years.
Thanks, Justin. I think then over to Nicholas, who has recently, as Heineken, acquired Distal from South Africa. And Distal, if I'm not mistaken, have set up one of the largest RE facilities in the country. So I'll hand over to you to just give more insight on that.
Thank you. Thank you, and thank you for welcoming me and explaining our journey at Heineken. Maybe a quick background about Heineken. You, of course, know the iconic brand, but maybe you don't know that we have 300 brands around the world, and we're in 60 countries. We started our journey in renewable energy almost 6 years ago, and we started to develop capacity all over the world. We signed almost 15 PPAs in different countries, and our goal is, of course, to expand capacity and generate demand. We have set net zero target by 2030 in our whole operation. That means our 200 sites in all our countries will have to get to net zero. And it's extremely ambitious because it means we have to decarbonize electricity, but also thermal energy. And we operate in countries which are sometimes quite difficult. We have a small island in the Caribbean or in the Pacific where sometimes we are the only manufacturer. So we are ready to invest. We are ready to commit long term, which is one of the beauty of the beer business. It's a stable business, and we are willing to take long-term agreements in our business. And we recently announced that we have basically acquired Distal in the Heineken business. And to give you a bit of perspective, our former Heineken business in South Africa was around 500 employees. And was in our group, it was the number 15 countries in terms of emissions. Now, with acquiring Distal, we have more than 5,000 employees joining us, and South Africa become our number 3 country in terms of emission. So it's highly strategic for us that we are really making an impact and we decarbonize our operation and our value chain. And we are doing this acquisition in a way that we say it's the best of both worlds. Because, of course, Distel was very active with NBI and local community. Heineken was also very active with RE100. So when the RAiSE initiative came, it was NBI, RE100, Heineken, Distel. We kind of joined to have the same vision, which is we need to enlarge capacity and we need to remove barriers of PPAs. And we have a proof point. The Heineken business actually have installed the largest solar on-ground PV in Citibank, which is our largest one in our group. And basically, we went through two phases. We had a 1 megawatt project, and we expanded to a 6.5 megawatt. And now we're exploring to have a battery storage, as you mentioned, to ensure we can maximize the output. And this is for us a great proof point that we can now roll out in the Distel business. And I know there is a lot of challenge in the South African energy business at the moment, but I want you to be hopeful. To give you a bit of example, we showcase that project to our new acquisition in Taiwan. And the local delegation was extremely interested to meet the South African suppliers because they wanted to know how to do that also in Taiwan. So there is also opportunity for your developer basically to expand and to enlarge. So we will be looking in the next future to also embark all our Distel sites. And we're looking for developers to basically expand capacity. We are working with RAiSE to make sure that off-site PPA are possible. We've done it in many countries, and we've seen that it is definitely the right thing to do in terms of generating capacity, but also making sure the cost of electricity remains stable. And for business, stability is important. A stable economy are driven by stable energy access. A stable planet is also driven by low carbon energy. So that's quite important for us in our journey.
Thanks, Nicholas, and thanks, Justin. I think the audience here will be a testament to, how active the corporate sector is since that removal of the threshold. And, Justin alluded that, your strategy, what you plan for a year, you saw that in 1 month, So renewables coming online. I'd like to open to the audience for any questions. I know we're running a bit behind, but I think we do have some time to take 1 or 2 questions.
Hello, my name is Joachim Byström from Absolicon. I have a little leading question, and it's in a typical brewery, how many percentage of the energy consumption is electricity, and how much is heat, and where do you get the heat from in your breweries?
Yeah, so in a brewery, you have 30% coming from electricity, 60% coming from thermal energy, gas, usually natural gas. If you look at the strategy how to decarbonize a brewery, we usually tend to work with governments and platforms like RAiSE to ensure the grid decarbonize, because once the grid is decarbonized, it opens up much more opportunities and solutions. Gas is extremely hard to decarbonize. It's always cheap. It's always easy to plug and a highly emitter of carbon. Once you have access to green electricity, you can start to have heat pumps. So you reduce drastically your energy consumption. You maximize basically your heating temperature in your brewery. And then you can look at other solutions such as biogas from our wastewater treatment plants, or looking at other solutions to decarbonize the residual emission in a brewery. So it's highly strategic that we bring more capacity of electricity in the grid to be able to accelerate our decarbonization of overall energy of a brewery.
Thank you. There's a question from the Honourable Minister in the back.
Okay. I have 3 questions. The first one is, we talk of unlocking renewables. In a country where 7,500 megawatts of energy are from renewables, where 3,800 megawatts are under construction, where embedded generation is deregulated and therefore a moving target. So is the selection of the term unlocking the correct one? That is the first one, because renewable energy development in South Africa is in full steam. That is the first question. My second question is, why do we emphasize a single technology, renewables, without talking to challenges that go with them. For example, the need for base load to partner with renewables. If there's no base load, renewables become a challenge in themselves. And in the discussion, that is totally closed. Nobody talks about it. Why are we doing that? Because if that is the case, it may constitute misrepresentation, really, because it doesn't present a full story. And the researchers must be able to tell us, why is Germany all of a sudden going back to nuclear? Nobody tells us about that. They have been all going for renewables. You look at Sweden. Sweden was saying by 2030 we'll have 100% renewables. They have changed that policy. Why have they changed that policy? And I think it will be helpful because when we come out of COP28, we should have learned rather than just be being sold a good story without being allowed to learn. The last one, financing. The financing, is it grant? Is it concessional loan? Is it loan that leads to indebtedness of a country? That is the question.
Thank you, Minister. And maybe I'll tackle the first one and hand over the other two to some of our panelists. Maybe instead of unlocking, we should say fast tracking rather. So I know you've put forward what we are currently have in plan and in place. I think the next steps is then how to fast track and ensure that we do have renewables online to deal with some of the energy security issues that we're facing in the country as well. On the issue of maybe then financing, I'm not sure, Justin, if you have an input on that, and maybe Neil, if you also have an input.
Yeah. So if I go straight to SME, I think this year we launched the SME grant campaign where we, as a bank, gave up to 10% grants against the loan that we gave to the client. So it is lending to the end user, but there's affordability and actually the project by the savings pays for itself for the end user. And I think that's how we approach all lending to our end user, where we say, well, you know, if you're going to invest in renewable energy and batteries, the cash flow of that client, the way we structure it, is that we would prefer that they are paying less on the loan than they were on energy. So it actually cash flow enhancing on the client. In terms of concessional, I think that's where we do work a lot with the funders to us, the DFIs, and now with the SARB, where to pass on that benefit to the end user. I think that's what we work quite a lot on. And then even when we give loans to clients, we look at making sure that the pricing is beneficial versus something else they would look at. So from that perspective, we do give grants, but generally when we lend to businesses, it's off their balance sheets. We're not taking guarantees from anyone else outside of the loan guarantee scheme. And we've had success that way, where, you know, not asking Treasury for backups in the private sector, but rather just supporting clients there. I think maybe just to talk from a business perspective, yeah, on that question, Neil, if you...
Okay, thanks. So maybe I'm going to tackle is it clear? Yes. The question on the base load. The way that we thought about it is, what is South Africa's energy requirement by 2030? And that 2030 date is linked to our 5-year plan that has just been adopted. And if it is at about 75 gigawatts that we require by 2050, I think it's an important target to then keep in mind. And I think it's also the guide for an integrated energy plan, which is going to have to be a mix that gets you to 75. And in that 75 gigawatts by 2030, you're still going to have coal power stations. In the way that Kusile and Medupi are still going to be running into the 2040s and even into the 2060s. But we are going to see a decommissioning of coal power stations, partly because of our NDC target, but also because many of those coal power stations are coming to the end of their lifespan. But I think it would be irresponsible as a government to say that, you're going to jeopardize that target of 75 gigawatts by 2050. And I think there's an acceptance that that's going to have to be a mix of energy sources that gets you there. So I think it's important to raise this issue of base load, but maybe what's more important is what gets us to 75 gigawatts by 2050, Minister, by 2030. Just on the loans and the indebtedness, in the President's message here at COP28 has been cleared that you're going to have to get more grants into the JET investment plan, or the financing of the JET investment plan, from our international partners, the original IPG partners, and the new ones that have joined. We are now sitting at just over $700 million US. We think we can push that into $1 billion in grants in 2024. But we've always taken the approach that, financing needs to be fit for purpose. And where there's a revenue-generating investment that we're undertaking, there are opportunities for private investment to come into that. And it comes back to, the point that I made about fiscal policy, that it is essentially about fit for purpose, requiring different sources of financing and different instruments. But we're increasingly looking at, with blended financing, how do we reduce the risk to the fiscus? How do we reduce the need for the levels of sovereign guarantees that may be required? And I think we're going to be, as a country, the first for some of these newer and more innovative models of financing. I'm told we're the first to bring the World Bank Group in its entirety into the same room, where there's the IFC, MEGA, which does the political risk guarantees, and the sort of lending window of the World Bank that South Africa borrows from the IBDR, to bring them in the room with a question: how do we unlock some of these concessional loans without the necessity for the sovereign to provide the kind of traditional guarantees that it would have had to provide in the past? And that's going to require a lot of creativity, a lot of innovation. But yeah, Minister, we trust in Minister of Finance and the Minister's team in ensuring that we don't get into debt that is going to be unsustainable, because that is going to have an impact over the medium and long term. So we have faith in Minister Godongwana's sort of careful watching what's happening with the borrowing. Thank you.
Thanks, Neil. Any inputs from our other panelists? I had a question on business.
Yeah, so I think I just, in terms of baseload as well, from business perspective, where we see partners looking at cogeneration, but that's why also the battery side of things with renewables behind the meter. We've seen a few clients invest in that, but these are not the big energy users. Because I think ultimately you do still need the baseload, and that's where staying connected to the municipality and still having your baseload is important. So we've seen a mix. Smaller businesses kind of invest in large batteries where they can not run their generators as much to avoid load shedding, and they've become prosumers essentially and manage their own demands. But I think the bigger you get, it starts becoming cost prohibitive to put huge batteries in. And just if you go to our kind of head office, where we, as ABSA, we have gas turbines that provide baseload, and they did through the first batch of load shedding, and we can manage the system based on which energy is cheaper, and also if we need those turbines running, we can keep the operations going. So I think it is important to have that mix of energy sources.
Thanks, Justin. And I think we are running out of time, but I'd just like to leave with a parting note before I hand over to Ritumetsi that with the RAiSE initiative, and particularly as NBI, we try to play a bridging role between government, business, and civil society. So it's great to see the minister in the room today. It's great to see ESCOM in the room today and business as well. So do look out for more conversations in the new year where we try to, I was going to say fast track, but now I was going to say unlock rather, but now I'm going to say fast track renewables coming online. So we look forward to engaging with you more in the next few years to help our country achieve that net zero target. Thank you to our panelists as well.
Thank you.
So thank you, Bhavna. Thank you to our panelists. And thank you for all the fantastic and I think sometimes challenging inputs that we're getting from the audience. This is a very real and robust discussion, and it's the type of discussions that we need to have. I thought I would add to the conversation that in terms of understanding how we can decarbonize the South African power system and really having that strong and robust knowledge base that can inform decision making, that's really based on the facts and trying to be transparent and as open as possible about these discussions. The NBI in partnership with BUSA, as well as the Boston Consulting Group. So we did quite an intensive set of analyses that is available publicly, and that just sets out, the insights, the facts, and that can inform decisions. We understand it is a complex space, but I think as is becoming more and more apparent, South Africa is so well placed to fully seize the opportunities that are sitting in quite an aggressive decarbonization approach and a decarbonization campaign focusing on the power sector. We have participated in one of the largest and most successful renewable energy procurement programs in the past. And what we're seeing is that, even having that very strong pillar in our toolbox of how we can respond, there are other channels and opportunities. So I hope that a little bit of what came through in the discussion today is that while we have this huge program, there are other scales at which, for example, the corporate sector can come in to support this fantastic, I think, resource that we have as a country, as well as really trying to build and increase the confidence we have in our economy, in our ability to respond to some of these huge global changes that we are seeing. And the RAiSE initiative really is part of bringing together the stakeholders, putting the facts on the table and allowing us to debate, to discuss, to inform, but ultimately to really advance and build the competitiveness of our country and respond to a huge challenge that we need to address. So having said that, I'm really grateful for all the insights that have been shared and really honest, authentic reflections on what is happening, and I think we're united. I'm glad, Minister, that you raised the point that in terms of being on that road and that journey, perhaps we need to be more ambitious. It's not about unlocking, it's about fully seizing and realizing the opportunities in a way that is managed, in a way that is balanced, and takes into account the different considerations and challenges that we face as a country. So with that said, I would like to thank you all for your very enthusiastic and energetic participation. And I would like to close the session, but also welcome you to please take part in the other sessions and conversations, dialogue that's taking place at the South Africa Pavilion throughout the next week. Thank you very much.